All right, guys, like always, welcome, welcome, welcome. This is for everyone who is a part of the TFU movement. This is a impromptu Tuesday night training. And basically what we're going to be training on is a couple of things. One, we're going to be training on really understanding the best moves for trading the TFU harmonic scanner. I wouldn't say the best time frame, because the best time frames is the time frame that you like to trade. So that's the best for you. But just some pitfalls to avoid when you are trading certain time frames. But we're going to spend the bulk of our time training on, I gave it a name. We're going to be TFU Storm Chasers. And I'm going to basically just continue from what Michael Wilkins was training us on for the last few times that he was training. And that's understanding what the storm is, how to avoid it, and when to come out and play again. So let's go ahead and get started. We're going to first talk about, let me make sure I get this thing set up. All right, let me go ahead and share my screen here. All right, can someone confirm that you can see my screen?
Yes.
All right, cool. All right, guys, basically what we're gonna do here, let me put it on the smaller one here. Hold on for a second, guys. Let me, I don't know what I just did here. Can y'all see that clear, or is it too far away? Can y'all see that clear, or is it too far away?
It's too far away because it's the split screen. So
okay, yeah, I have it on the big screen. Hold on for a second. Let me bring it back. Let me bring it down here. All right, here we go. I think this may work. All right, can you guys see that better? Or is it still far away?
It looks good.
We can see it now.
Good.
All right, cool. All right, let me try to get as much as this. All right, guys, what we're going to talk about is trading the harmonic scanner and what to look for, and some of the things you want to, just some little nuggets to add for when you're trading different time frames. So let's start with the 15-minute window, because a lot of you like to grab the 15-minute window because you can grab you some early positions, and if it's in the 30, you can try to grab the 15. Here's one of the rules that I will add for trading the 15-minute harmonic. Is when you get a harmonic in the 15-minute window, let's say we got this GBP AUD in the 15-minute window, don't immediately look to start trading this trade. The first thing that I would do is I go to the hour window and see if there is a harmonic. Let me go back to the 15 real quick, and I'm gonna mark this here. Right here. And I'm gonna go up to the hour window and see, okay, is there a harmonic there? No, there is no harmonic in the hour window. Is there one in the 30-minute window? Yes, and there was one going in the same direction. So now I feel real good about this harmonic here in the 15. Just a simple extra step. And what this will allow you to do is if you see it in the 30-minute and it's going the same direction, and in the 15, of course, you're going to get into that harmonic a little quicker, but then you are able to know that it's possibly not going to do an extension. When you catch an extension is when you have the harmonic is in a bearish direction in the 15-minute window, and at the same mark, you got a bullish harmonic in the 30-minute or a bullish one in the hour. That simply tells you that this 15-minute window harmonic is possibly going to extend several times because it's not ready, because the higher time frame harmonics go in the opposite direction. I can't tell you how many times I lost the harmonic trades because I saw the thumbs down, it even closed, but you guys typically do not wait for the double confirmation. You take one with the money line and you just jump in and ride it out. And then you never took the time to look at the 30-minute window, and you never took the time to look at the hour to see if there's any harmonics going the opposite direction of this 15-minute window. When I did that, when I took the time to check the higher time frames, guys, my losses of trading the 15-minute window went to zero. I did not lose another trade when I was doing that. Now, am I saying that's going to happen for everyone? No. But what it did for me, it helped me do one or two things: avoid a trade and or wait for that trade to clearly give me the entry. Now, here's another thing that I would do with the 15-minute harmonic scanner. This is just me, because I want to minimize my drawdown. So what I would do, is I personally don't trade the current candle. Now, this is one of those, you see it in the 30 and you see it in the 15. Yeah, you're going to take this as soon as you can. But if you don't, let's just say the 30-minute didn't have a harmonic and it just had nothing. For me, I want minimum drawdown because my lot sizes are getting a lot higher into the, standard 2, 3 standards. So I don't want a lot of drawdown when I'm entering a trade, or I don't want to enter one and then it park, the car stop and then it shoot back this way because it was just, it's going to extend. So what I'm doing is in the 15, I let the thumbs down come, I let the money line come, and I let it close. Then I'll wait for the next candle going in that direction, start heading in that direction, and I personally will take that trade. That is me. Some of you guys like to get in early. It's called the early bird special. The benefit of the early bird special is you potentially can capture more pips. The downside of the early bird special is that you can get caught in the extension. You guys know you're not traders that like to release a trade when it doesn't not going your way. You're that type, like, I'm gonna ride it out. I'm gonna wheel it back down. I'm gonna, Romeo, you're gonna do all kind of crazy stuff to try to wheel that thing in your direction when it's constantly extending. So to avoid that, especially some of you guys who are new, and if you're watching, just joining us, practice the safest trades first. Then if you want to get a little, risky and frisky, you can start trying some of the early bird trades. Now, do they all work all the same? No, but I'd rather take the safest trades versus taking trades that are a little less safe. So here's what I'm talking about. Here's a prime example. Here's your thumb. It came thumbs down, had the safe zone, and you had the money line. Everything was there. Yes, this candle was the bomb. 30-something pips. I'm just assuming that you didn't know there was a 30-minute window there. My trade would have been right here. As it closed, I saw the direction. I'm gonna take that trade right here. And I'm going to look to go to what? The border. All right, I still caught me 20 pips, but I had little to no drawdown. A drawdown was maybe, actually none, because it came back up first and then came down. All right, then the next candle came up and it pushed up. If you stayed in, that's where my drawdown came. But I was in profit before I was way up here in the negative, waiting for it to come back down. That's just one way of doing it. Of course, always the other way of doing it is you can take it on the site of the thumbs down. But if you see both conditions, the thumbs down and you see the safe zone, oh yeah, I'm sure you can take that, but these are still considered early bird entries. In the 15-minute window, I would say wait for it to close, wait for the next candle. If you get both conditions in one candle, just wait for the next candle to start going in your direction, then you probably can take that trade. That's the 15-minute window. Now let's talk about the 30-minute window. In the 30-minute window, my suggestion would be wait for at least one of your two conditions to close. You don't have to wait for both the 30 and the thumbs down and the money line, but you do want to wait for at least one of those conditions to close. Now, this is not a great example because this was just a massive pushing candle. If you see both conditions form in your 30-minute window at the same time on the same candle, there's a strong possibility that that is going to give you a good run, and you could. But if you see the thumbs down first and then it closes, or you see the thumbs down and the money line, you're like, okay, I think this is ready. Again, that's considered an early bird entry, and you will win some, you will lose some, but you got to be okay with either direction. Then you wait for the next candle to go in the direction you want to go. Now, here's where you want to be careful too, is knowing what your stop loss is. All right, that's the most important thing. Your risk. What are you willing to risk, and what is your stop loss? And I've seen guys ask in the group, what is your stop loss? I start with a 25 pip, 30 pip stop loss. If I'm in the 15-minute window, my stop loss is 30 pips. If I'm in the 30-minute window, my stop loss is 40 pips. And if I'm in the hour window, my stop loss is 50 pips. I have to give the market room enough to breathe. And so my lot size is in accordance to my stop loss. So if I'm not willing to lose $500, don't put a standard, because my stop loss is 50 pips in the hour window, or vice versa. So whenever you pick your lot size, have in mind, give the market time to breathe if you're trading in the entire time frame. So if you got in this trade here, this was a 40 pip stop loss. It depending on where you got in this trade, this may or may not got you. Most people would have took it on this candle. That's why I said this is not a great example of waiting for the candle to close. Let me see if there's a better one. You guys got a good idea of what I'm talking about. So again, a quick summary: 15-minute window, let both conditions close, and then look for the next candle going in that direction. 30-minute window, you can let one of them close, and then wait for the candle or the next condition, thumbs down or safe zone, to form. Hold on one second. Let me make sure I mute everyone out here. And then of course, the hour window. For me, what I'm doing with the hour window is because I see that the hour window does not repaint as much. When I get the flash of the thumbs up, I let it move a good number of pips, and I'll take that trade personally before that candle even closes in the hour window. Now I'm telling you what I do. If you want it to close, you may give up a lot of pips, because an hour window, it takes an hour for that candle to complete. So, you can use that, how you want to. But those are the three ways that I trade the TFU thumbs up. 15-minute window, I look for 30 pip stop loss. I wait for two conditions to close and the next candle going into the direction I'm looking for. 30-minute window, I just need one of the conditions to close, and then I look for the candle going in that direction. And then the hour window, I just wait for the condition to flash, go into that direction. I don't wait for it to close, and I take that trade. Does anyone have any questions about just the harmonic scanner TFU or what I just shared? If not, we'll keep going forward.
When you say conditions, are you referring to the D, the safe zone arrow, the thumbs down, and the TP line? Or
No,
what
when I say conditions, I'm going to assume that you already said yes to the 2 questions. And here's the order of the questions of how I asked them for myself. Let me go down to the 15-minute window. And that's a good question that you brought up, because it's 4 questions that you should say yes to. But I think there's an order to actually help you avoid spending too much time. My first question is always, do you see the D? Yes or no? Yes. My next question is my TP border for a bearish move below my trend line? That's a yes or no question. If my TP border was right up here, I'm going to question whether I should get in this trade or not. I don't need to see thumbs down, money line, safe zone, and all the other stuff, because I've already said no to the second question. My TP border is not below my trend line. It's above it. Does that mean I should not get in this trade? The answer to that question is no. That's not what that means. That means that I'm questioning, should I? There's a difference of doing it and should you do it. Every trade you could take, but should you take it? These are the rules that I'm setting for me. Is if I cannot say yes 4 times, I don't want to take that trade. And my conditions are in that order. Do I see the D? Yes. Is my TP border below my trend line? Yes. All right, next question. Do I see my thumbs down and safe and money line? Yes. All right, do I see my safe zone? Yes. I'm gonna wait for it to close because I'm in the 15-minute window. I'm gonna wait for the candle to go in my direction, and then I'll take my trade. I'll set my stop loss, then I'll set my take profit, which is, remember y'all, this is a channel line, so this TP border actually moves. So don't use exactly on this channel as your take profit. Just be somewhere in that zone, anywhere from 10 pips or so in that zone as your take profit. Does that answer your question?
Yeah, but what do you consider quote? I know that you need the D and the TP border to be in there and in the proper position, but when you say 2 conditions, are you referring to
right here
the money line and money line?
No, the money line is not a condition because it's not happening all the time.
Okay.
The 2 conditions is your thumbs down and your safe zone.
Okay, so unless you have the thumbs down and the safe zone arrow for the 15-minute window, do not take it.
Okay. I'm saying because the higher you start getting your lot size, the more safer you need to be in your trades. When you're trading, just starting with micro lot size, you can be a little bit more risky. But when you start scaling up as you're compounding, I'm gonna end our conversation off with compounding, you have to get a little bit more stingy in your entry. You can't be as loose. So I have seen the 15-minute window flash, give us both conditions, and before the candle closes, it's gone. It's a wick and it's head back and it's extending. And now I'm trapped in that trade with big lot size, too stubborn to get out the trade, to just take the loss and wait for a better entry. And then I get to trying to will it in. So I'm saying try to practice waiting for it to close, because again, if you go in the 30-minute window and you see a harmonic in both the 30 and the 15, you may get away with taking this earlier than it closed, because both time frames is trying to get that same harmonic going. But if you don't have that, there is no harmonic in the 30, there is no harmonic in the hour, I'm now going to look for the safest trade. That's personal. I'm going to look for the safest trade.
Do you ever trade the 5-minute window?
I have. I lost. That's where I lost the most money.
I'm down a couple $100 from last night.
Yep. I lost the most money in the 5-minute window because those harmonics are the most unreliable things ever.
Yep.
And
I
most
found that out the
traders
hard
don't
way.
even trade harmonic scanners in the 5-minute window. So
Oh,
I would tell you guys to ban that from your, that trying to be slick and say, well, I'm gonna go at a 5-minute window and get in early. It's not worth it.
nope.
If you're not quick to get out of a trade like you are quick to get in the trade, stay away from the 5-minute window.
Okay, thanks, Dan.
All right. Any other questions? But that's a good one because I lost the most money trying to harmonic scanner the 5-minute window. All right, guys, that is the entire thing on trading the thumbs up, thumbs down harmonics strategy. Since I've been doing this, my winning ratio has increased tremendously. Am I getting a lot more pips? No, but I'm getting the pips I need. That is a key thing. I'm just going to tell y'all that. It's not about trying to get a lot of pips. It's about getting the pips that you need. We do not want to be a group that is known for, woo, we're the pip catchers, but yet your money is not matching the pips. I want you guys to get into compounding. Okay, I'm jumping ahead of myself. All right, so that is what I want to talk about in regards to the harmonic scanner. I spent about 20 minutes on that. Now let's talk about how to trade this new, well, it really is not new. Those who've been with me from day one are gonna be like, this ain't new, this is the same thing. I just gave it a different name. Hold on for a second, let me set it up real quick.
And you're saying you're going to trade without the scanner. Let's say if you don't see a scanner that day, but you want to trade without the scanner if you don't see the scanner pop up.
That's what we about to talk about right now.
Okay. Okay.
We are about to talk about that just because of you.
Okay, I appreciate that.
That's my issue.
Because some of y'all got some crazy brokers that don't share the same harmonic patterns as everybody else. So let me bring this up for you guys, and we should be ready to rock and roll. All right, let me share my screen again. All right, do you guys see this?
Yes.
All right. This is my setup when I'm trading without the harmonic scanner, okay? I would like to know what session I'm in. These are my session boxes to tell me what session I'm trading in. All right, so how do I trade this? Remember, Michael Wilkins shared something with us maybe, I don't know, 2 or 3 weeks ago in some of our training, where when you're trading off of these semaphores, these are considered war zones, okay? Or in my terminology, these are category 3s and 5s, tornadoes and hurricanes. And when you are trading, you never want to trade during the storm. You want to go take cover, you want to take a break, you want to monitor, watch the news, see when the storm has passed so that you can possibly re-enter that trade. Now, what are we talking about? These semaphores are actually great points to show you when the storm is happening. Have you guys ever took a trade and you were about to take a trade and then all of a sudden a semaphore popped up and started running and then you wanted to jump in with it? Because someone told you that the semaphores are going to break out first and then they're going to reverse. Yes and yes and yes. Yeah, that's how I found out about these semaphores. These are exhausted periods. They will show you when the market is exhausted, and then sometimes after they come to a halt, you go, okay, that's it. Now let's trade the other way. And you just start taking the next candle and you start riding it up. Guys, I have lost a lot of money calling myself trying to trade with these semaphores. You don't want to trade with them. You want to trade off of them. So always view these semaphores as Hurricane 3 tornadoes, or I mean Hurricane 3 tornadoes, Hurricane 3s, hurricanes and Category 3 tornadoes. You want to take cover. You don't want to be in the market during the times when these semaphores are forming, whether they are level 2s or whether they're level 3s. But what you can do is you can play off of those, or you can trade off of these conditions. And you want to trade pretty much kind of off of them as they are forming. Here's an example. This level 3 bullish or exhaustion letting us know that the sellers have come to an end. This storm has come to an end, and there's a possibility that the bulls may start to take control. You do not know this because you don't see any of it. I can say that now because I see the end result. But if I just saw this right here only, the only information I have is currently right now, it is not safe to trade. When is it safe to trade? Well, when you get your conditions again, you get your thumbs up and it close. Then you get your what? Your safe zone. Now, this is the hour window. With the hour window, I would wait for the actual, I would wait for the candle to close, no matter how far that thing runs, because you don't know. Once it closed, I'm gonna need my other two confirmations to enter the trade coming off of this, all right? And that is my thumbs up, you need your money line, and you need your safe zone. So this is about 40 pips, but it was 40 pips that you didn't know was going to be there. You could not have taken this trade here because it was still on a bearish money line. You can't take this trade here because it's still not giving you any information. Now, you could be early bird on anything, but once this closed right here, what that told me was there is a high probability, and that's all I can give you guys is probability, that there's a high probability, especially coming off the 1 hour window, that the market is probably looking to take a bullish direction. So I have a thumbs down, a thumbs up. I have now the money line, and I have the safe zone. I took the close. It took about 3 hours for that storm to calm down. I now can look to take the next candle wait for it to go in the direction and look to take that trade. I don't use the TP border when I'm not trading the harmonics. It's a great idea, but I have not done enough testing on it to say for a fact that it's going to go and touch the border, you know, do all those things. I don't know that at all. But what I do know is if I'm trading the hour window, I have typically been getting about 20 plus pips. And sometimes, and here's what you guys can do. I'm not saying absolutely to do it, but you can be a little adventurous, and with trading this way, you can trade storm to storm once you got your confirmation. But you have to be careful with that because the higher time frames, that movement can be big in your favor, or it can be even bigger against you. And I want to find out the one that we did today that show you exactly what I was talking about. And then I'll open it up for some questions on this because I know there'll be a lot of questions. Let's go to the hour window. Let's talk about today. Okay, first of all, when I woke up, this level 3 semaphore was right here. It was right here. And so what happened was I saw nothing on this candle here, and I saw this candle pushing down. I said, well, I'm gonna wait for this candle to close, and I'm gonna wait for it to go in my direction. But as soon as this candle came in, it started going up this way. It pushed up this way. I was like, well, it's not ready. If it closes and start going down, I'll look to take this trade. Yes, did I give up some pips? Yep, but I didn't know. I didn't have any confirmation yet. So I waited. Now, here's the one thing about the hour window. You technically do not need both the safe zone and the money line. in the hour window only. This is just what I'm finding from my experience, that the hour window doesn't have as many fake outs as the 30 and the 15 with this particular strategy. So if you want it to be an early bird, you always have the option to be an early bird in the hour window. Just be ready to take both sides of that coin, the good and the bad. That this can start as a push down, and then before this hour candle closes, it can wick all the way back up, and this whole thumbs down can disappear. That's the chance you take by jumping in on the side of it versus it closing. Well, when it closed, the next thing you have to think about is there might be a pullback. So don't be quick to pull the trigger as soon as you see the next candle open, because this was what? This was a nice 35 pip move. It's going to try to breathe and then do another push down. So when I saw this, I waited for this wick come back down. This is the candle I took the trade on right here. And I looked for about 20 pips. This candle went about 30 some pips. I had little to no drawdown when I took the trade on this candle. I I gave up a lot of pips, but I entered the trade right here. It moved down about right here, and I caught about 25 pips. I had a nice lot size on it, and I was happy with what I got. Now, I could have said I want to ride this down all the way to the next storm. I want to see a bullish harmonic pattern. Guys, there was some news or something happened today that caused all the GBPs to jump 100 pips. And so I exit the trade because I had to take profit. As soon as I exit, it came down a little bit more. I thought, man, I should ride this out some more, guys. And all of a sudden, this thing jumped back and shot back up about 120, 130 pips. Could I have gotten in this trade? Emotionally, I could have. But I had nothing telling me I should get in this trade other than I see this candle shooting up. If you choose to do that, hey, take that victory. If it goes against you, know why it did, because nothing was there for you to get in other than you saw this thumbs up. It wasn't coming off of any war zone, because remember, this level 3 semaphore was here. So it actually canceled out this one here, and it was a level 3. So if you're trading without the harmonic scanner, if you guys actually understand, these semaphores are part of what creates harmonic patterns. All right, so even if you don't have it show up, look for these in the higher time frames. The 30-minute window is probably the lowest I would go down in using this particular strategy, just because the 15-minute and definitely the 5, they form higher highs and lower low semaphores a lot, and you will get caught trading these back and forth, and it will emotionally mess you up. So with the hour window, you can wait, you can take it on the site. You can win a lot of those, but I like to be safe. I always teach safe. I wait for the close, wait for the next candle to go in my direction. I don't need both of the conditions, thumbs down and the safe zone, to take it in the hour window, but I would encourage you to do that in the 30-minute window. So same thing. Here was a level 2 semaphore. All right, wasn't a level 3, it was a level 2. This candle pushed down. It actually gave you both conditions. The temptation is to take that trade. That is a good trade. If you decide to do that, just always understand the reward and the risk. This one would have paid you very well. I would have waited. This candle pulled back. This is the candle I would have took, and I still would have went for 20 pips. Does that make sense, or anybody have any questions about that? Unmute yourself if you have questions.
So just to clarify, you wait for the pullback candle and you get in after that one closes.
I wait. Like, let's say, for instance, this candle came down and this next candle formed. I need to see it going in this direction before I would personally enter it. If you just take the next candle, you're going to get caught in a pullback. I mean, most of the times, and a lot of times what you can look at is, guys, if you have a candle that goes at least more than 30 pips, that next candle typically would do some type of pullback before it does a continuation. It's kind of like swimming. You know, it go up underwater, it can only breathe up underwater for so long, it's going to come up for air. That's typically what these pullbacks are. It's coming up for air, pull back on you, trapping people, you know, all that good stuff, and then continue on. But what I found in doing this quite a bit is that if I want to be risky, again, here's another quick one. If you're going to be risky when both conditions form on the same candle. Don't be risky on just one, especially in the 30-minute. If you just get the thumbs down only in the 30-minute window, don't be risky on that one. If you're going to be risky, let both of the conditions show, and then you can go ahead and take it. Other than that, just wait for it to close. Wait for the next candle to form and go in your direction. I typically let 3, 4, 5 pips go my direction, and then I'll take the trade. I'm comfortable with setting my 30 pip stop loss on it, and I'm still setting, you know, 20, 25, 30 pip take profit. Sometimes even 30, depending on what the market gives me. Now, in this scenario, guys, you saw a level 2 semaphore here that caused you to take the trade here. Then all of a sudden you saw at the same time, I told you can sometimes ride these trades until you see the next semaphore pointing in the opposite direction. If I'm in that trade, and a lot of times you're going to see that form in the 30-minute window more than you would in the hour, I'm definitely looking to exit this trade if I see another semaphore, because one, I don't know what it's going to do. I don't know if it's going to continue to extend. I don't know if that's the end of the road and it's time to go back the other way. So here's another example. You wouldn't have saw this in the hour, but you could see this in the 30-minute window. All right. And sometimes what you guys can do, guys, is if you're going to trade these, open them up side by side. If you have a particular pair that you like to trade, put a 30-minute window on it, put an hour window on it, and look at these semaphores out of both windows. That can also help you in your decision making. So here's one. This is the news. This is definitely news. 70 pips in one candle on GU has no choice but to be news. So would you have caught this and took this? I think everybody on this call, as soon as you saw both thumbs up and safe zone, you'd have jumped in this trade. I would have too. That's not even front. But if I was going to be super safe and I was struggling over the fact that this one here, I would have been praying that this next candle would have gave me the push, because that would have been the candle coming off the storm. Don't trade the storm, pushing down, exit, wait for the conditions for you to get in. You got your thumbs up, you got your safe zone, you got your money line. It was a big candle push, definitely 141 pips for GU. It's definitely news, not common. You won't see it that often. If you guys were able to capture that, that was great. But then the candle closed, and let's just say this wasn't this big of a move, but it closed. Wait for the next candle, start going in your direction, take that trade, then set your goal, 25, 30 pips. Set your stop loss. This will help you stay, I guess, minimize your drawdown. Any questions? I'm gonna drop down to the 15-minute window. Just unmute yourself if you have a question.
Is there any reason to use this strategy if you have the harmonic system working on your broker?
Yeah, because not all the time you will get a harmonic pattern. So if you only want to trade the harmonic patterns, then you don't have to do that. But if you are wanting to find more good opportunities to trade, this will be my next suggestion for you to do if harmonics are not popping up or you're not getting enough.
So I'd have to make a new template for this particular
Not really.
trade.
No, actually, no. Because let me see if I can bring it up. Okay, here. So this would be the same thing. So this is you trading. This is a harmonic, right? All right. So let's say, for instance, we can use what would be a good example? Let's say right here. Let's say, right, what time frame? This is 15. No 15 minutes. Don't use this strategy on a 15-minute window. All right. So let's say, for instance, I don't want to use today's activity because it was news driven and it's not the norm. Here go one here. This right here is not the beginning of a harmonic. Even though you see it there, you only see these here because it's back test. It's, you know, it's back information, and harmonics were created off of these. But let's say you saw this level 3 with no harmonic on it, right? And so your question would be, would you take this trade? Talk yourself through that, Melinda. I think that's you, right? Nope, that's not Melinda. Leah?
Oh, yeah.
Talk yourself through this.
So it's the semaphore. There's the thumbs down arrow, and then right next to it, it's the safe zone arrow.
Okay, you're in the 30-minute window. So you're gonna wait for both of them to close, or you're gonna take it after the thumbs close? And it's your choice. It's again, there's no right or wrong. It's just early bird and then a little safe.
30-minute window, I'd wait for both.
Okay, so you would take it, so you were waiting for the candle to go in your direction, which would be on this candle right here.
Right.
Because this candle went up, and then you would have caught it right here on this candle here. So then what you would have done is set your stop loss, which would have been 30 pips here. Let's just say this quarter point would be your 30 pips, and then you would set your stop loss. And as you can see, you have very little drawdown. Now, you would have caught the pips here, but this was a trade that you could have took without the harmonic scanner.
Okay. So do you always set the stop loss right after you jump in a trade?
I always set a stop loss as soon as I enter the trade, just because I don't know what this market's going to do. And if it's going to get me, it's going to get me for what I was trying, or I was willing to lose. I always set my stop loss first, then I set my take profit.
And then your take profit, how do you make that determination?
I just make it based on, I'm always going 1-to-1 ratio.
Okay. Typically,
or what the market gives me. I would love for the market to give me 50 pips in the 1 hour window. 35, 25. I'll take whatever it gives me. But I set it for a 1-to-1 ratio.
Now, how much do you pay attention to the moving average line?
This right here, well, it varies for different people. I think some people have it on the 14. It's actually could be used as a cool little tool. I've been testing this out on, let me show you here. This is what most of you guys are trading on right now. And this is actually kind of cool because this color moving average line on the 14 is actually a good trading line for you too. You can say, well, I'm gonna avoid all of these trades until I get it to close and break below and change colors. And I can stay in this trade until it changes back colors. That is a trading strategy. I have a gentleman, that's how he trades this thing. That's his fourth condition. He waits for his thumbs down, he waits for a safe zone, and he said, I'll wait until it breaks this moving average and my color change. Is that something you need to do? I don't think so. But is it a bad thing to do? Absolutely not. And he be trading from color to color. But test it out. But the key is there are plenty of ways for you guys to jump into this market and get trades, even if the harmonic patterns are not forming. And that's what I like to say, but you want to avoid the storm. So again, for me, it would have been hard for me to jump in. If I saw this right here, I would have realized that the level 3 semaphores definitely outweigh the level 2s. Okay. But I would respect these here. I'm like, well, shoot, this probably is going to do some type of pullback, or it may continue and, you know, break this move here and form a higher high. We don't know. That's why I don't like trading them. Now, in this particular trade, you would have been trading going into the storm. It's different if you wasn't in this trade and all of a sudden you saw it come down. You saw this form up here and you say, okay, I was told it's going to break out, so I'm going to jump in it. Don't do that. You'll lose a lot of your trades that way, because now you're playing Russian roulette, hoping that it will drop some just because someone told you that they break out. They're bad. They're storms, so I don't want to be in them unless I'm already in the trade. I'm looking to exit it, so I can go in the house, wait till it's over with, wait for new conditions to enter the trade, boom, and then go from there. Any other questions?
I have a question, Stan.
All right, come to the mic. I can't hear you.
Okay, can you hear me now?
Yes, a little bit better. All right, what's up, Sandra?
Okay. Hey, I was wondering, Stan, I'm sure that like the pairs, how do you know which pairs go with which session? I think I know you've told me, but it's like I just don't. I think I don't understand how to relate them. Like how I know what to look for.
AUD pairs, anything that has AUD, JPY, or NZD.
And you do that in every session?
Anything that has, this is their dominant session. It is a New Zealand, it's an Australian, Japanese session is right now that we're in now. So the pairs that you're looking to trade will be those pairs that run during their sessions the most. GBP is not doing the Asian session, it's the AUD. So if you ever notice, you go back and back test AUD, NZD, JPY between 5 and midnight, those are the pairs that run the most. Even if you're doing AUD JPY, if you're doing NZD JPY, those, because this is in their session. So it is important to know the sessions for the volume. I would not trade GBP USD. I would not trade GBP CAD. I wouldn't trade anything that has USD in it during the Asian session, because there is no it's not a GBP session, it's not a London session, and it's not a New York session. So that's why it has the least amount of volume during that session, because there's not any buyers and sellers doing that from those two countries in that session. But there are, because an Australian dollar is a New Zealand or is an Australian market, along with the Japanese Tokyo market. I guess it's the Tokyo, it's Sydney Australian / Tokyo market. And those are the three pairs for that. Then when the London market opens, which is right around at 2:45, 3 o'clock mark, that's when all of your GBPs, all your euros this is their session. So that's why GBP AUD is a good London session too. So now you kind of getting a little bit of both of those sessions, and it goes from the London and it bleeds into the New York session. All of the GBP pairs kick in at the opening of the London session. But what I've noticed is GBP AUD and GBP NZD, and sometimes GBP JPY will give you good moves in all three sessions.
Okay, thanks, Stan.
All right. Any other questions? Anything about this trading in the storm?
What does it mean to stack trades? I keep hearing people say that, and I know I'm not ready to do it. I'm just curious what that means.
What people are doing when they're stacking is they are hitting this button multiple times, your buy or sell button multiple times, and they're taking multiple positions. Now that's good if your account can handle it. To me, it's the fastest way to blow out your account, or it's the fastest way to get margin out if your lot size is too high. So most people, it's sexy to stack because you see this pipsometer running, and what was that 12 pips or 20 pips can be now at 40 pips or 60 pips. But, you know, again, it's all about your lot sizes and finding that best trade. So it sounds good, if your pips are growing your account, then it's cool. But if you're just capturing pips just for the sake of capturing pips, then I want to encourage you guys to move toward more of compounding versus stacking. Finding the best trade, but then compounding that trade each time you do those so that your account is growing and not so much the pips. It's great to post those, but at the end of the day, you want to look at your account and see, is your account growing exponentially like your pip? But that's what they're doing when they're stacking. They're just hitting the button 2 or 3 times. Some of them are doing, 1 cent lot size, 2 cent lot size. Or let's say if you was going to do a 5 cent or $5 lot size, instead of hitting it $5 one time, you may go hit it 5 times just $5 one time, you hit it 5 times at $1. You're still trading at $5 a pip. It's just that you have multiple positions, and that pip wise will look really good on your pipsometer. Because that would be like, if it moves 25 pips and you hit it 5 times at $1 each, it'll say, man, I'm up 125 pips. Well, you're really up 25 pips. You just in it $1 5 times.
Oh, okay. And then it seems like you have Trader's Way and Hugo's Way as a broker. Do you tend to toggle back and forth between the 2 brokers to see?
No, I had started with Trader's Way, but they have a hard time uploading the money, and Hugo's Way has just been really easy. So I just still use it because I have so many monitors, so it's just up there for looking at different charts.
Oh, okay.
I use Hugo's Way.
Okay, thank you.
Mm-hmm. Antoinette, you got any questions on trading without the Harmonic scanner?
No, you pretty much summed it up.
All right. Any other questions?
Yeah,
right,
hey, on
Go
your
ahead.
chart, I noticed that you don't have the supply and demand zone.
You are away from your mic, or I can't hear you.
Can you hear me now?
Faint.
He said something about supply and demand zone.
What about now? Can you hear me?
Yeah, I think I can make out what you're trying to say. Go ahead.
I was asking, I noticed you don't have the supply and demand zones on your chart where it helps measure the support and resistance, but when looking at these semaphores and kind of getting a good idea of when they're going to turn in our favor, especially if we're looking to take a sell, like on the chart that you have here, do you use those quarter points as like extra confirmation?
Yeah, I use those, and I use these actual support and resistant lines. The pivot point and resistance 1, 2, and 3. The zones are just as zones, so I'll show you guys that. The reason why I don't do it, and here you guys will see here, it's messy. Sometimes when I do this and they overlap each other, if you have the Harmonic scanner, they overlap each other, and it just gives me too much color changes. So you definitely can put these on here. They will help you. Sometimes they can scare you. It's just a zone. And so sometimes you get in here, you'd be like, okay, it's not going to go up anymore, and you'll get out of it too soon, or vice versa. But it's definitely a great thing to have as far as understanding if you're going to hit some resistant areas or support areas. I just don't do it because if I trade, I wait for the storm over and I take it. As soon as I see the next storm, I'm out anyway. So I don't need a supply to say I'm gone.
And also, when you're trading the semaphores without the harmonics, you usually just have a set amount of pips you go for. You don't try to go to the border, do you?
No, if I don't have the harmonic, I don't really use the TP border as my take profit area. I just I typically, again, that's when we're gonna go back. When I'm compounding, I have a number in my head based on the amount that I have started with. Okay, so if I'm trying to grow my account, everybody give me 1 second here. I'm gonna try to pull this up so everyone can see what I am talking about over here. Because this is what I want, because Guys, we have something that's so powerful in regards to our two styles of trading that is really, really simple if we slow down. Mike was saying this yesterday, if we just slow down and we take our time, we will find ourselves potentially making a lot of money, a lot of money. Can someone give me the session key for this room? Here, I'll try to pull it up on my phone. Hold on.
It's 535
535
241
241
3536.
3536. All right, appreciate it. And let me come out of this real quick and talk to everybody. And so if you guys take your time, the compounding effect on trading these two strategies will be extremely, extremely profitable, a lot quicker than stacking. Just because you got to trust what you're seeing, and you got to trust what you're doing. Hold on one second here. And when you do that, guys, it will really help you in your. Y'all don't hear me? Do y'all hear me? You don't hear me double talking or anything, do you? Okay,
No.
I got everything cut off. Okay. All right, let me bring this up real quick. All right, this is how I live. This is how I function. It's available for everybody in your back office too. So before you guys ask me, how do I get my hands on that? It's in your back office. So I want to share this with you guys and just close our time out right here. I call it the power of 60. And basically, let's just take $200. Oops, not there. And all of this is hypothetical. So if you're watching this, I'm not guaranteeing anything. I have a disclaimer. This is for illustration purposes only. And let's say you're doing a simple 3%. Now, these highlighted areas are based on a 1 week of trading. Now, how many of you guys would say that you take more than one trade a day?
Yep.
Talk to me.
Yep.
Does anybody just take one trade and then they done for the day? No.
No.
Nope.
Wait. Somebody said, who said that?
Me, Dallas.
Dallas, you take one trade and you done. Oh, you know what, Dallas? That is you. I have to give it up. You are. And I bet you what, you are, and you're gonna be the guy I want you to speak on. I want when I'm done, because he's an actual person that probably, I'm just gonna say this, started with a very marginal account and just being disciplined on his compounding. And you'll be amazed. I'm not gonna have him to tell you the amount in his account, but the compounding is probably 6-7 times some of our accounts that we're chasing a bunch of pips versus just grabbing him a solid 20 and dipping. Now, if you take more than one trade, let's just say you traded all 3 sessions because you had the time to do that. That's at least 3 good trades that you're trading either out of the 30-minute or the hour, where you can know that if I take this trade, there's a strong possibility that I can get 20 pips out of that trade, whether I'm trading off the Harmonic scanner with the TFU setup, or I'm trading as a storm chaser, trading these trades off of after the storm is over. But let's say, guys, you took just simply one trade that gave you a solid 20 pips. Has anybody been with TFU more than 30 days? Talk to me. You've been here longer than 30 days.
Yep.
Yes.
Yes, I have.
How many of you
Yes.
been here longer than 60 days?
Yep.
How many of you guys been here longer than 90 days?
Yep.
Anybody been here longer than 6 months?
Yep.
Somebody said, yep.
Yep.
Now I want to ask you the question. Does your account reflect it?
Nope.
Now, don't answer that question. Don't answer that question.
You asked it.
But I want you to ponder on that for a moment, because I want you to understand now what we didn't have back then was clarity. Now we have clarity. There is no doubt in my mind the system that we have works, and it works more consistently on the positive side than on the negative. What has happened that is not seeing the results is we as traders have not been working it consistently. The system been working itself consistently. We just haven't been working it consistently. We hear a story of someone trading in the 5-minute window, so we just want to go jump into 5. We heard somebody do something in the 15, then we want to go jump into 15. We heard somebody put out a trade and he's saying that it's good to go, and before we did our own homework, we just jump in. We have not become students of following our own system so that we can become better traders. So, guys, just imagine this is 3%. And I'm just going to go down 20 days. That's what 20 days of trading, one trade will look like. This is what 40 trading days will look like. This is what 90 days of trading. Taking a $200 account and growing it to over $1,100 just at 3%. That's taking one trade. I know for a fact 90% of you don't take just one trade. So even if you took 2 trades a day, this money just literally doubles. But let's just stick to this for a moment. You're 90 days into this, and it's all hypothetical. Let's just run it for another 90 days. 20 pips. Look at your lot size. You just now reached the standard. So you're definitely within proper risk management. But that's looking at one good harmonic a day. Finding you a good solid 20 to 25 pips. You typically want 25 to cover your spread and your commission. If you can find one good trade a day for 25 pips off of any one of these strategies that we're doing, guys, you look up in 6 months and your account can be, this is off of $200. I beg to differ of some of you guys. I know you started your account off with more than $200. Here's $500. This is 90 days. 60 trading days is really 90 calendar days, roughly. And always use this back and forth. Give yourself margin of error. But if you take your time, you should have very little error. So I'm just going to say 2,800. Going into 3 more months. These are the stories in the next 6 to 8 months I want us to be talking about. I followed the system. I was disciplined. I didn't take every trade that was posted. I was not a tradeaholic. And every signal that came out, every harmonic ideal that someone posted in the room, I took. I just took the good trades. I know what I'm trying to do. I got my pips, and I dipped. Now, that's what I want this group to become more, because I want this group to say, man, 6 months of using this strategy, I'm now a 5-figure trader. 6 months of using this strategy, I'm now a high 5-figure trader. Some of you guys may start with $1,000. 3% is still 3%, and 3% looking for 25 pips, guys, is not hard. How many of you guys on here, let's just call it out, how many of you on here has been getting 25 pips out of your trades when you're taking a good trade? A lot of you. That's 60, that's 90 days right there. I'll end it on this. That's 5,000. We're still at 3% in 6 months, guys. 30 grand from $1,000. Trading what you see, not what you think. That's what this is all about. You have something in your hand that a lot of people won't. And that's just simplicity. Let's not be anxious to be in a whole lot of trades. And I'm talking to me. I'm not talking to you. I'm talking to me because I had to calm down because I see so many trades and I want to hit the lottery. I want to hit the lottery fast when I know that trading is a pace. There is a gentleman that I know personally. I still can't believe the words that I'm going to say out of my mouth right now. This is all he trades is harmonic patterns. He has his own strategy that he used to enter the trade. And all he says with harmonic patterns is that you need a strategy. Guys, there's so many groups and companies that have different harmonics. We know IML has a harmonic. It's a pretty good harmonic. There's this harmonic here. You got UOP got a harmonic. There's another company called FSO. They got a harmonic. They got one that's called FX Math. They have a harmonic. All of these harmonics are harmonics that will draw up the patterns. You still need a strategy to get in it. Those entry points are not solid entry points. They're ideals. So everyone still needs to attach a strategy. This gentleman ate, slept, breathed this harmonic pattern, and literally for 45 days, that's all he did was study these harmonic patterns, tested his strategy. He went demo for 45 days because he knew if he can blow up in a good way, a demo, and he used the same discipline and strategy, he could do that for a live account. After 45 days, he simply opened up an account. He said, I'm just going to go for it. He put $1,500 in there. I'm not telling you guys to do that. I'm always telling you, always use expendable income. Do not put your rent or anything in there. And he said, Stan, I just got disciplined. I traded the same way that I would trade if I had the demo account. He's been in it for 2 years. Guys, this guy has made more money than I think I've ever heard anyone make trading. He is now documented a $200 million trader in
military guy.
years. Military, y'all know who I'm talking about.
I know you're talking about.
Yeah, Tim Holloman.
Yeah,
It's absolutely insane.
Yeah.
He is, and if you talk to him, he's the most modest dude, down to earth, good old country boy from Beaumont, Texas. And I just follow the system. Y'all hear the word 200? He's so strong now. He changed his number. You can't find him. I called his number. It said the number you have reached is no longer accepted. I said, my man, he done dropped off the face of the earth because people ain't never knew him. All of a sudden they like, hey bro, God called me to ask you for 200,000 so I can start this business up. I mean, he said he had to go.
Yo, Stan.
Yeah.
He was only growing like 15 pips a day, right? Only 15 pips, right?
His goal, he said, if he gets 20, 25 pips, he's doing backward flips. This guy was a 6 to 15 pip person. But only thing that changed for him was his lot size. That was it. He said, I am a compounder. And here's something he told me. He says, once you guys can get your account to $10,000, it will morph to 6 figures within 6 months if you just keep the same strategy. And once you get to 6 figures, he says within 3 to 6 months, you could be $1 million trader. These are just things he was just telling me. And I was just sitting there like, what? And then I look at our system. I'm like, I see 20 pips all day long. So I'll close out with that, guys. That's a little food for thought. Please download the compounding calculators in the back office of the training room. You can modify it how you want to fit what you're doing. I use 3% because it's definitely very reasonable. There's some people out here that's doing 8, 10, 12%. Stay away from that because that's the worst thing that can happen if you take a trade wrong. You over leverage because you're trying to compound, and you can mess up. Here, guys, 3% is what? 3%. So even if it goes against you, you can see I just adjust those stop losses a little bit to, adjust with your, your risk management. Any questions?
We're going to be a millionaire. That's it.
That's it.
Yep.
That's it. So all I want to do now, guys, is I want to hear you guys talking about what you're compounding. Let's change our culture a little bit here in our group. PIPs are great. I want to hear you guys talking about, man, I just compound my account to, I'm this or that. You ain't got to give your numbers. I don't want to know people's number, but I would love to hear, man, I'm a 4-figure trader now. I'm a 5-figure trader now. I'm a 6-figure trader now. That's without telling numbers, but that's giving you an idea that you're compounding. Because that's what I want to recognize. I want to recognize people growing in their compounding ability. And we can say because of the TFU movement, I became a 4, 5, 6, 7, whatever figure trader, not a PIP catcher.
Yeah, my compounding is growing.
I can't hear you, Lawson.
I said my compounding is growing.
There you go. Exactly. That's the conversation I like to hear, is that my compounding account is growing. Larson is a person who trades a higher time frame. He don't want to be in these 4, 5, 17 trades a day. He take him 1 or 2 good ones a week, and he's gone about his business. This thing works the same way on the higher time frame, guys. Just requires more patience.
Yep.
All right, guys, we are here an hour plus. Hopefully this was beneficial for you guys. I'm gonna go ahead and stop this.
1:45, Stan?
Yes, I'm gonna get some rest this time because I overslept last night.
Sir. Yes,
So
sir. Yes, sir.
I'll get a little rest tonight. I will be up. Just log on. Don't log on to this one here. It's the 944 one, training room for the live session. And hopefully we'll find something. But again, guys, now that I'm compounding, I'm personally not that eager to have to catch a trade. I just want the right trades, and I want the best trades. I personally try to trade at least 3 good trades a day.
Stan, what's the live session
I'm
number?
trying to supersize my compounding.
You said the live session. Is it a different login for the live session?
It's the 944 one.
Okay.
And are you still going to do the signal room?
Here's what ended up happening with the signals room. Yes, I actually have the template up for it. And maybe we can just talk about this real quick. Here's the thing about the signals room. All I want people to give signals on is these 2 strategies. Anyone can pop out a signal into that room. So I'll just open it up. It could be a good way for you guys to market to people as well. The only downside about it is because it's not one-dimensional, I can see it getting out of hand. And in the sense of, I like to keep it a little privatized. So that's why when we open up a Telegram room, a lot of times I like to just put people in the Telegram room. Hold on for a second. All right, guys, I'm going to end this recording, so we'll continue to talk. And so rest of you guys, watch the videos to learn how to do these 2 strategies.